Hello everybody, Steve Griffiths here, developer of the MTPredictor software program. In today's MTPredictor video, I'd like to look at our VS or volume spike setup. But before we get onto the charts, as usual, let's have a look at our risk disclaimer. Just remind you that all examples in these videos should be considered as hypothetical. No trades are actually taken. They're just shown for illustration and training purposes only. Also remind you there's a risk of loss in trading and investing. Put another way, all professional traders know and understand, and more importantly accept, that losses can and will and do unfold. As part of trading, losses will always be there. All trade decisions are your own sole responsibility. Right, let's have a look at a 24-hour chart of, let's start with the YM and just show you a setup that we had a day or so ago. Then I'll go to the ES and have a look at a setup that's currently in the process of unfolding. So what is a VS setup? Well, a VS setup, you can see, is labeled on our chart here. This is MTPredictor 8, our standalone version. If I pull up a chart of let's just bring that into the video, of our NinjaTrader 8 add-ons, you can see you get the same setup. Well, that's the one on the ES I'll talk about in a minute. But if I go back to the YM, you can see there's the setup exactly the same. So the same in both our NinjaTrader add-ons and our standalone version. Right, let's go back with our training mode and just go to just before this high here. So what is a VS setup? Well, a VS setup is if I look at our volume here and I look at this previous high here. What we're looking for is if I put a tag, high tag on this high, what we're looking for is a bar, if I go forward one, a bar that makes a wide range move pushing through an important psychological high or low. This comes in on high volume. Most amateur traders would look at this and say, yippee, this is a break to new highs, and therefore look to go long as the market breaks out in the original direction. But if we place our DP resistance area, in this case on this prior pivot, right mouse click, do DP, you can see there it is on the chart. It could have been placed on the chart even before the market even got up to this level. So you'd have known it was there in advance. But the point being is, this is an area where professionals look to either reverse the market and make a fake out, or the market will push through and then carry on. In other words, it's a decision point where the market will make a decision. If I move forward one bar, this is a 15-minute chart on the 24-hour chart of the YM, by the way. It actually basically rejected this resistance level and started to come back down again. If I take this off, you can see it even clearer. In other words, the market failed to follow through, but more importantly, it failed to follow through at our decision point level. In other words, that was the area where the failure occurred. So what does this mean? Well, it means that the professionals are coming into here and actually selling this. In this case, they're selling the break to new highs. Amateur traders would be buying it, professionals would be selling it. Why is this so good? Well, because the professionals normally win out over amateurs. So if this is correct, then the professionals will probably move this lower and move it lower quite sharply. So we can get a trade set up in and around this. We have a target of our DP off the next or the previous low. Remember, we use correct position sizing. I'll just take that high tag off there so it doesn't confuse things. Remember, we use correct position sizing to keep your losses. Remember, losses can and will and do unfold. But in this case, if the loss comes in, it would only be one risk unit. But if the profit comes in and the market gets to this target, the profit will be larger than the loss. In other words, we're looking for profits of going to be 2 or 3 times greater. In this case, this will be 3R or 3 times greater if it gets to the target. We move forward one bar and it now enters you short. If I keep on going, you can see the market does move very sharply right into that first target. And that would be a place where potentially 3R profit would be available. If I turn training mode off, it actually went significantly lower than that. So if you were looking to run it a bit further, you may have been able to get a little bit more by using our MTP trend. It wasn't signified as being strong, or was it? Let's have a little look. No, it wasn't. When it hit the target, it wasn't beyond our strength bands. You would have been coming out at the first target. Nevertheless, it was a good trade of approximately 3R profit. So that's our volume spike setup. It's where the market makes a wide range bar beyond a prior important psychological high or low, and then reverses at our DP support or resistance level. We then look to have a trade in the opposite direction as professional traders look to move the market in the opposite direction. And usually these moves are quite quick if they unfold, with profits that are much larger than the losses. Let's have a look at one that's actually unfolding live at the moment. If I go to the ES, here we are. Here's another setup, exactly the same kind of thing, with a high volume VS spike as the market moved beyond that psychological high there. If I right mouse click, place the analysis on, you can see that this is the market live at the moment, and this would be our potential profit target down here. So will the market make this level? I don't know. It doesn't matter. All it matters is you're in a short trade. This is where your risk would be kept to a 1R or 1 risk unit loss. If the market then goes against you, that would be a 1R loss. If it goes with you and reaches the target, it would be a 5R profit. Because this is a volume spike setup and markets normally go with you relatively quickly, as we saw on the YM, in this particular example you'd probably want to have your stop to break even. So as the market went through here really quickly, you'd probably have your stop to break even, so this would probably be a free trade. But this is a good example again of the market unfolding, so that could be a potential fake out, but you see where the fake out happened at our DP or decision point resistance level. If the market now gets down to this target, and we can see whether that does over the next few hours, because this is a 15-minute chart, there's a potential profit of 5R. So a trade setup that's unfolding live at the moment, so we can follow this and see how it unfolds. This is actually a 24-hour chart, so it's a 15-minute chart of the ES on our 24/7 time template, so a 24-hour chart.